Welcome back to the Business Owner's Brief, our monthly sit down with Biz2Credit CEO Rohit Arora, where we break down the biggest issues impacting small businesses. In this episode, we're tackling two major topics: the recent government shutdown and how it's affected small business operations and SBA lending, plus the Federal Reserve's latest rate cut and how small business owners can leverage it to access capital and plan for growth. You can also listen to this conversation on your favorite podcast app, Spotify. Link in the description. Rohit, thanks again for sitting down with us today. And one of the topics we really want to discuss is the government shutdown. And given that the SBA is one of those affected areas and suspending new 7A and 504 loan approvals during a shutdown, how should small business owners react if they were relying on SBA funding for near-term projects?
As of now, because of the government shutdown, we are seeing a shortfall of $100 million a day of loans under SBA programs that are not getting approved or funded. Obviously, that creates its own challenges for small business owners. The way the small business owners can cope up is that, they can apply for non-SBA lending either from banks, or the good news is that there's a lot of private credit money available through platforms like Biz2Credit also. I think one silver lining in this is that Fed has cut the interest rate by 25 bips. So the cost of borrowing has gone down. And we feel that with further interest rates cut coming down the line, it will reduce the cost even further. Obviously, not having SBA money is a challenge. But at the same point of time, a lot of lending over the last few years have moved from SBA to non-SBA. So I foresee that, those alternative channels can fill in the gap.
And you were just discussing about the 25 bips that happened, with the Fed rate cut. Can you explain a little bit more for a small business owner that doesn't know enough how that actually greatly affects them in a positive way?
Yeah. So in this country, what happens is that if you're going to go and take a mortgage, then you will typically get 5 to 10 year fixed rate. But most of the small business lending is predicated on the Fed rates, and these are floating interest rates. So when Fed was increasing the interest rate, that led to a higher interest rate burden for small businesses. But as Fed is cutting the interest rate, that clearly transmits back for the small business lending, and even their existing loan gets cheaper. So the benefit of that is that it helps them to improve their cash flow. It also helps them to, borrow more money because now their debt to income ratios get better.
Some financial experts are saying there might be another rate cut coming before the end of the year. Now, you did just explain greatly how 25 bips is doing well. Is this something that, should business owners take advantage now and then also take advantage later, or is there, a sweet spot?
As we saw in the last speech of Chairman Powell, that he had indicated that there could be 1 or 2 more rate cuts before the end of the year. If that happens, then it will be another between 25 to 50 bips. The rates will get cut. As I said earlier, is that, for a lot of small business owners, these are floating interest rate loans. So even if they borrow money at a little higher cost, it will actually, the interest rates will come down as soon as Fed cuts the rates more. So I think that is, on that side, is a positive outcome, because the last 3 years have been very tough for small business owners. Their interest rates cost went up quite significantly, or what they're paying even on the existing loans. And now I think the good thing is that those existing loans are going to get cheaper, but also the new money they borrow will also come at a cheaper cost.
Great. And what are some things, as the founder and CEO of Biz2Credit, obviously you have great financial experience. What kind of outside forces do you look at when we're talking about Fed rate cuts and so on?
So I think what is starting to happen is something very interesting. So we are seeing a lot of, obviously exuberance around AI, and the stock market is going up, but at the same point of time, gold is at a record high. And I think the challenge that is starting to happen is that tariffs are finally starting to lead to increase in the cost of goods again. And also with the immigration issues and everything, the labor costs are also going up. So in my view, the inflation situation is very fluid right now. And also the employment situation is not that good. Right now the job markets have really slowed down very significantly. and also new job creation is at a record low as we speak. So I think we are getting into a little bit of a logjam right now, and obviously because if the unemployment goes up, Fed will normally cut the interest rates. But in this scenario, if the inflation doesn't come down, then the maneuverability for Fed to cut the interest rate is not very high right now. So I think there's a very interesting times that we are in.
Yeah, I think, serendipitously, you just tied back to our last video where we talked about how AI is making it a lot easier for businesses to start. So with seeing this unemployment rate now being higher than jobs available, do you think, AI is actually accelerating, business startups?
So 2 or 3 things are happening. Obviously, with AI coming in, the ability for people to develop new apps and start new tech-driven businesses is becoming easier, like what happened with cloud computing, and at the same point of time, the applications of AI is also going to grow, out there. I think this is also going to lead to more unemployment, especially in white collar jobs, and also more pressure on the wages, actually is coming. And the other thing that's going to also happen is that, the difference between haves and have-nots is going to also go up. So I think in that sense, AI is acting as a big momentum play if I look at the stock price or stock markets. But at the same point of time, it can also lead to a lot of pressure on actual jobs and the wages, actually. And that's also one of the reasons why stock market is more excited about AI, because they feel like this could become a big productivity tool, and that will mean that there'll be a lot more growth in the GDP without the proportionate growth in the job opportunities or on the wages side.
Yeah, and that brings up a great point of having the stock market as a signifier for AI growth as well as relation to unemployment. Is there any other indicators, either within the stock market or just any other outside data points that you're seeing that relate to the AI and unemployment?
So I think one of the things which is happening in the stock market is that any company which has anything to do with AI, their stock prices are going up very significantly. The non-AI companies don't have much appreciation in the stock price, so obviously that differential is increasing very quickly. That also means that it puts a lot more pressure on every company to become more AI ready out there. And also at the same point of time, from a perspective of a consumer, while it will bring in a lot more savings, but that also means that if the job growth or the wage growth doesn't happen, then their purchasing power can also diminish over time.
With the current government shutdown putting SBA loans on hold and freezing small business lending, what's plan B for banks to keep credit flowing?
So in case the government shutdown doesn't come back, or the SBA loans are not happening, so then banks will have to look at more traditional funding options which are non-SBA, whether lines of credit or term loans. Or the other way is that they can refer more of these customers to alternative lending platforms like ours, because obviously we source a lot of our credit from private credit players and insurance companies, and obviously they are all working right now. So I think those are the two alternatives. And the other alternative is that some of these banks can also increase the credit limits on the credit cards that they have issued to small businesses, so that they can get over this time when these businesses cannot get SBA loans.
Great. Well, thank you. Well, just wrapping up here, we were talking a lot about very large topics that, affect the future, but just going into short term with the holidays around the corner, is there any advice you'd give small business owners where, holidays is usually a large, revenue earning time for them? Is there, anything?
So I think there are two trends this year which are very different from last year. So obviously holiday time is where small businesses can make anywhere from 40 to 70% of their revenues. This is also the time when they need the working capital the most. We have seen that. So this is a busy season for them. I think this year, especially the small businesses who are dependent on importing goods from outside the country, I think they're finally starting to feel the pressure of tariffs, because the inventories which were imported before tariffs went up have now depleted quite a bit. And obviously this is a busy season, so they need a lot more inventory. and their ability to get the goods from outside the country is still there, but it means at higher cost. And because of competition, because of AI, because of other aspects, they're not able to transfer all of that cost to the consumer. And that's why we are seeing that inflation rate has not gone up much, in spite of tariffs coming in. But that also means that, businesses are bearing more of the cost, which obviously erodes their margins. And what this eventually will do is that, this will also lead to slower job creation, and also this can lead to a lot more stress for businesses if these issues are not addressed well, because they are getting squeezed both by higher cost of goods and also by higher labor costs.
Great. Well, thank you very much, Rohit. I appreciate your time.
Okay.